Hello, this is CMG Oral Space lesson. We are on the main topic, mastering your candlestick patterns. And then we are on episode 19. So episode 19, the topic that we are looking at, the subtopic is trading the engulfing bar candlestick pattern, right? We have looked at what is the engulfing bars. The engulfing bar actually is a pattern. So after looking at the pattern, how do you trade it? So in looking at how we trade it, that's what it boils down to what is called trading strategy, right? We have looked at the pin bar strategies. We first look at what is a pin bar pattern, and then we look at how to trade it, right? In a number of ways. So now we are on the engulfing bars, right? The engulfing bar, they are of two types, right? We have looked at that. So if you have not watched the video, you should check episode 4 of this series, right? And often say candlestick patterns. Look at that, and then you know what they are, what they mean, and then from there you can come to this episode, which is 19, right? So we are not going to waste time with the description. I will not waste time or with the description of what is a candlestick pattern, but we focus mainly on how to trade them, right? The engulfing bar pattern is one of the most powerful and profitable price action patterns. Knowing how to use it properly as an entry signal will tremendously improve your trading profitably, right? It will improve that profitably. Now, in this section, you will learn how to use the engulfing bar pattern profitably. It doesn't matter if you're a beginner or advanced trader. If you're looking if you're looking for better trading strategy, in fact, ignore this. If you're looking for a better trading strategy more than what you have been using, you just have to what? Focus on what? This, right? Is one of the best strategies that you can use in this profession. The pin bar is one, right? So this video that you are watching, the series, please take note of them, right? You will come back to what is trading strategy, and then from there you can get back to these videos and actually learn them well and adapt them, implement them to your advantage. So that's what it is. So we have treated the pin bar. We are now on the engulfing bar, right? So now, what is an engulfing bar pattern? We have looked at this already, so I'm not going to waste time here. This is what the bullish one. The bearish candle will come, the smaller one, and then the second one is the bigger one, which is what a bullish candle, right? This is how it is. This is a bullish one, starting with a small candlestick, which is the bearish one, and then the second one is the bullish one, the bigger one. The same way applies to this one is just the opposite. This is the bearish one, the bearish engulfing. So the bearish engulfing starts with the bullish candle, the small one, and then the bigger one is what? The bearish one. It's as simple as that. And we know when they are found, they have higher impact on the market. When we see this, the bullish one at the bottom of a downtrend, it means the market is going to go up. That's what they mean, basically. That's their impact, their function. If you see this candlestick pattern at the bottom of a downtrend, like this, it means that the prices are going to move up, right? In the opposite. Now, when you see this one too, at the top or at the end of a resistance, right, the market is going to move down. You can watch this video in episode 4. So I'm not going to waste time reading them. Now, what I said, this is here. This is where it is. A bearish engulfing pattern occurs at the end of an uptrend. It is a top trend reversal indicator. It shows that the bulls are no longer in control of the market, and the price trend is likely to reverse. It's as simple as that. This is the bullish one. I told you when they are found at the support level, this is the pattern in this red ink, right? This red box. When they form at the resistance level, this line is actually the resistance. I just drew mine, right? My drawing is very bad. So this is it, the resistance level. When they happen around this, it shows that market is going to move in the upward direction. Same way applies to the bearish one. If you see them at the resistance level, right? They form here. Look at in the red box. This is what bearish engulfing. When they form there, market moves down. Of course, when they form there, see what happened here. So your TP could actually be here. The TP could actually be here. SF could be around this place. And then your entry could be here, right? Your entry could be here just after the formation of the engulfing bar candlestick pattern. This is the bearish one. So that is it. Now, let's read what is here. According to Steve Nyson, the father of modern candlestick chart, this candle must meet 3 important criteria to be considered as a reversal pattern. The market is in a clearly definable uptrend or downtrend, right? You have to look at this first. This thing, I think we have done it a number of times. They are very repeating. We are just repeating them. The engulfing bar, the engulfing candlestick comprises of 2 candlestick patterns, right? 2 candlesticks. The first one, the first body is entirely engulfed. The first body is entirely engulfed by the second one. It means that the second body is always bigger than the smaller one. The first one, sorry. The second real body is the opposite of the first real body. So opposite means that if the first candlestick is bullish, the second one would be what? Bearish. And if the first one is bearish, the second one would be bullish. It's as simple as that. That is what it means. Now, how to trade? So we are now at the main point, how to trade the engulfing bar price action signals. That is what we are. That is our focus. Now, to trade profitably these charts, in fact, you need to respect, you need to what? Respect 3 important elements. We need 3 important elements that we have to consider. Forget about the grammar here. We have to look at 3 important factors. One is the trend, right? One is a trend. So you can realize that this trend, these factors of confluence are very common. They are repeating. It means that they are the building blocks. You can't do away with these things. The trend, your signals, and your patterns. You can't do away with these things in this profession. You have to master them. That is why we are doing a master class. You have to master them. Now, the first one is the trend. If you look at these, if you look at any charts, you will notice that there are times where the market is moving clearly in one direction, and at times where it is moving sideways. So whether in trending or ranging. To be honest, trading the engulfing bar pattern with a trend is the easiest way to make money in the market. Of course, this is true. You don't need to be highly knowledgeable about technical analysis to determine whether the market is trending or not. You can look at it with your naked eye and see that the market is trending or not. It's as simple as that. Make it stupidly simple. If the market is making series of higher highs and higher lows, it is about an uptrend market. And if it is making series of lower highs and lower lows, it is simply about downtrend. This is it. This is an uptrend. So the highs on the higher level, the lows. So in general, you can realize that this is what? An uptrend. Right? It's as simple as that. So the illustration above shows a clear uptrend. You don't need to use an indicator to determine whether the market is trending or not. Right? Just look at that, at your chart, and try to apply the concept of higher highs and higher lows and vice versa. When you are analyzing your charts, bear in mind that the markets move in trends, and trading with a trend is the most important element in your technical analysis. There's no more important There's no other thing important than the trend. Don't, in fact, never try to fight it or to control it. Otherwise, you will pay expensively. you pay dearly for what? For trying that. So just keep it simple. That's what you mean. Now, please don't. I think you are not worried with the fact that the PDF has some grammatical errors. I disclaim that from the outset that this PDF, I didn't prepare it myself. But because it's a good book, I didn't want to do any editing before bringing it here. But as we read the grammatical errors, I'm going to correct them, right? So just listen to what I'm saying, right? Now, you can't make money under any market conditions, no matter how powerful, no matter how powerful is your trading system, right? You have to be patient enough and let the market tell you which direction it's going to take. Successful traders say the trend is your friend. And if you want to master trading the engulfing pattern, your first rule is to follow the market direction. In other words, the trend should be your best friend, right? Don't do otherwise. If it's buying, just follow in the buying. If it's selling, follow in the selling. Don't do otherwise. You can decide to do the otherwise when you think you are good. I am not going to stop refusing this fact that you can be what? You can learn to some extent that you decide for yourself, right? So I am giving the basis, giving the intermediate level, and I'll give you the advanced. Even at the advanced level, I won't tell you to follow this or that, right? You will do your own judgment, right? If that's good for you, just follow your niche. It's as simple as that. Now look at the second factor, which is the level. It's about the resistance and then the support. When you find a clear definable uptrend or downtrend, the next step is to identify the most important levels in the market. I mean, the most powerful support and resistance. If prices test a support level and stop, this is an indication that buyers are there. This area is watched by all participants in the market. It's true, because it represents a great buying opportunity. Like the way you are watching a market, there are a number of people also seeing the same way you are seeing the market, right? The same spectacles that you are looking through, the people, whatever you are looking through, someone may also have the same bias, right? So many a time, these opportunities are very clear in the market. That is what it's saying. Conversely, if prices test a resistance level and stop in an uptrend, this is a clear signal that selling strength is in the market. Example below shows how the market participants interact with support and resistance levels. So this is what is happening. So now in the same time frame, let's say a daily time frame or 1 hour or 4 hour, you can actually find a number of channels or a number of consolidating markets happening in it. Now, what it means is that if you look at this chart, the whole overview, the bigger picture of this, we see that the market is doing what? It's actually what? Going down, right? It's downtrend. Generally, looking at the bigger picture of this, the market is what? In the downtrend. Now, within a particular trend, you can find another what? Structure. The market structure here generally is what? It's a downtrend. But within this downtrend, you can actually see what? Consolidating what? Structure. Now look at this area. This is one consolidating structure, and this is another consolidating what? Structure. Right? So someone who is trading on a shorter time frame, right, can actually be what? Buying and selling within this area. Someone can also be buying and selling within this area. Then another person can generally be what? Selling, only selling, because generally this is what? A downtrend. So you see, you can take smaller pictures, smaller parts of what? A whole structure, and then do whatever you want to do. So that is why we have to do top-down analysis. So I'm telling you one thing, that sometimes you may be two different traders on the same chart. One may be buying and another person may be what? Selling. It just depends on where your TP and your SLs are. It's as simple as that. And a particular pair, someone may also be what? Buying, another person may be selling. So it is normal for this to happen. So when you start trading and you are in a group and someone is doing the opposite to yours, don't think you are right and the other fellow is wrong. Nobody is right, nobody is wrong. The important thing is that you make your money at the end of the day or at the end of that position. That is the most important thing. Right now, these levels are different forms. These levels take different forms such as, correct? So these levels take different forms such as trend lines, channels. The channel is this, like the bouncing surfaces, flags, triangles, and your ability to identify them in your charts will help you find better price levels in the market. We have candlestick patterns that we learn. We have the flag. We have different, the head and shoulder, whatever, the OB and all that. You will be introduced to them shortly, don't worry. So they have different candlestick patterns. Now, in trending markets, when prices pass through resistance level, that resistance could become support, right? If you are at a particular level and prices move above you, your original name becomes the opposite of that. It's as simple as that. See the illustration below to understand how to trade engulfing bar pattern with support and resistance in a bullish or a bearish trend. This is a bullish trend. So let's see what happens. I'm going to generally talk about this. So when we are reading, I think it will be easier. This is generally an uptrend, right? So if this is an uptrend, it means that this could what? Initially be what? A resistance. It could actually be a resistance from the onset. And then until price break out of it, then it becomes what? A support, right? That is it. Now, where we see the breakout, what actually happens? We see what? A bullish engulfing happening there. So the bullish engulfing happening or forming after the breakouts gives us what? A confluence that we can actually do what? Buy, because the pattern forming here is a bullish what? Candlestick pattern. So hence you can what? You can buy. So this is it. So you buy here and take your TP somewhere here, right? At this level, your SL can actually be around this place. That's it. So let's read. There are other technical tools that can help us find the best levels in the market, such as supply and demand areas, moving averages, and Fibonacci retracement ratios. 3, the signal. The signal here is an engulfing bar pattern, right? After looking at the trend, the levels and all that, the second thing, in fact, the third thing, important thing is the pattern. What pattern actually formed after the price broke out, or at that level, what pattern formed? And what formed there was a bullish engulfing pattern. So what do? You can actually what? Buy. So the signal is engulfing pattern. You can apply the same rules when trading the inside bar candlestick pattern. Your ability to identify an engulfing candlestick is at a key level in a clear uptrend or downtrend. I think let me take this reading again. The ability to identify an engulfing candlestick at a key level in a clear uptrend or downtrend will greatly enhance the probabilities of making a winning trade. So ability to identify them, that's why we are learning them sequentially, step by step. We are not rushing through this book, right? So step by step, you can even go back and watch the videos again. In fact, I read this book and I read it more than 5 times. In fact, more than 7 or 8 times, right? So for you that you are watching the video, you can actually watch the videos a number of times until you are okay. I think you can download it from YouTube. Yeah, you can download it from there, and then you can keep the videos. They'll be your in fact my first copybook when it comes to trading. So anytime you're getting confused, you come back to this level and you take them up. It's very important, right? So this is what you're going to do until you become good, very good. So that is it. So let's see example here. This is what another bullish trend. It's moving up, right? Sorry, the trend is moving up in that sense, right? So like we saw in the earlier example, if this is the bullish trend, it means that this line could, in fact, was initially a resistance level, right? Prices were moving from the bottom, moving up until they broke here. So it means that this was initially a resistance level, a resistance line, until they broke out. When they broke out, they came back to test the line again, retesting. In this profession, retesting or pullback is very, very important, very key in this profession. People look at pullbacks, and pullback gives you a higher probability. It's very good. So if you are a conservative trader, this is going to help you all the time, many a time. So that is it. So they pull back to this level. And when they pull back to this level, what happened here? There was a bullish engulfing. You should know this pattern. If you don't know them, please go back. Bullish engulfing. So when this form at this level, what happened? Boom. Market moves up in that direction. So that is it. So now you realize that this resistance now becomes what? Our new support level. What? That is it. Now, trading engulfing bar with moving averages. So we will end here and continue in the next episode. I don't want to be bombarded you in one video, right? In one video. So we'll move to the next one. Thank you very much for watching. Please like and subscribe to our page for exciting videos later on. Thank you for watching. See you in the next video.